You can
Yeah.
prove you can trade in the first phase, then
Yeah.
you know what's going to be different about some second phase. You know what I mean?
It's a chance to make sure you fail more.
Yeah, yeah, precisely.
So of course, the world of prop is multifaceted, multifolded, and it just seems to be evolving in 100 different fashions, very, very, very quickly over the last couple of years. I mean, I would say really it's become the most interesting and the most popular subject of choice amongst retail traders, because it's given for the first time ever retail traders access to outside capital, right, in a structured manner, and it's become so popular that there's thousands of prop firms out there now. And I wonder, given the evolution of prop, there's sort of, Jesse, maybe you and I can talk a little bit about this. There's really sort of, I think, two primary categories now in prop. There is the FX CFD model, right? And within that model, there is the two-step eval or the one-step eval. It's sort of like, you have to pass one challenge, and then you have to pass a second challenge, and then they give you money, or you can just pass one big challenge. Or there's the second model, which is the futures model. And in that particular category, it's a subscription model. You basically pay a monthly subscription until you either fail or pass, and then you can reset yourself up. Is there anything else I'm missing? I mean, I think those are the two big, broad ways that this is structured. Yeah.
Yeah, that's the gist of it. I mean, the only other difference that I think is notable is the profit targets are a little bit different. Most of the futures funding models, they have a little bit more strict of like daily loss and also total drawdown. And then, depending on which firm it is, they allow different amounts of contracts to be paid. So I think that they are a little bit different of an experience. But like you said, the biggest difference is, either the one-time fee for the evaluation or the subscription model, which I think there's definitely pros and cons to both of those.
Actually, let's talk a little bit about that. Like, what are the pros to the subscription model? What are the cons? What would you say?
I think that the pros to the subscription models, it gets you used to trading in a kind of, I guess, more white collar market. For example, what I've been doing lately is taking some of my money from, the CFD funding firm and starting to dabble in futures, like with a personal account. And it's, I've been practicing for some time. It's definitely a different beast. You know what I mean? It's your risk management's a lot different. You have to, you're not getting sim fills as much. I mean, you are on some, depending on your firm, if you're doing a funding firm. But, if you're trading in a live market, there are things that are different that people aren't conditioned to worry about or don't learn trading through certain, which is it's not like a bad thing, but I think that's a benefit of it. And then also, with the subscription model, I mean, if you're doing very well, you can obviously get funded for a lot less, but it is, it's a double-edged sword.
What about you, Chris? What do you think about the CFD FX space, especially the difference between the two-step process and the one-step process? How do you judge those type of structures?
So with our program at Kickstart, I mean, we offer a one-step process, and I think that that's just a much better approach. I mean, the way we tackle it is like, look, all you have to do is prove you can generate 10%. Don't lose more than 5% overall, or 4% in a day. That's it. And whether you do that, in a day, a week, a month, a year, it doesn't really matter. And it's a one-time fee, so it's not. What I don't like about this, I hear what you're saying about the subscription model, and I agree to an extent. But what I don't like about the subscription model is obviously it's an ongoing cost. So while it may seem like less upfront, less of a barrier to entry, I guess you could say. You're paying that subscription in perpetuity, whereas with the other model, it's a one-time fee. And in the case of the challenges, I don't really see the point of like a two-step challenge. I never did. If you can prove you can trade in the first phase, then what's going to be different about some second phase? You know what I mean?
It's a chance to make sure you fail more.
Yeah, precisely.
It's an extra chance to make sure you fail. That's my view. Maybe Jesse, you might have a different view. How do you think about that, the two-step model? Because you're actually funded by I'm sorry, you were funded by FDMO, you said, right?
No, my Forex funds.
I'm sorry. Oh yes, whatever. You're funded by a prop firm, but you went through a two-step process, right?
Yeah, it was two-step. So it was, you have to get 8% without losing the 12%, and then you have to get 5% the second time, which it's easier than some. Some are 10 and 10, some are 10 and 5. I think 10 and 5 is the more popular model.
Right. Sorry. So in that process, in the two-step process, you had to make 8 and you had a 12% drawdown. You had a
total drawdown. Yeah, but then 5% daily. So you only had to get it.
Really generous. Those are it's sort of an easy first target, much wider second target. It's kind of reverse of the single step process. And then on the second step, what do you do?
Second is just 5%, and then you still have that overall 12% drawdown. I think that it sounds good, but like let's be honest. I think that if we had the statistics of who gets to a almost a 10% drawdown, that actually would turn it around. And I'd say it's a mental thing, though. It's a mental thing, and I think that's the name of the game, right? Is you can look at it in different perspectives, and it can either hurt you or benefit you. Like somebody could be more reckless, say, "Oh, well, I have 12%." You know what I mean? So then they start tumbling, and the snowballs. Or you look at it like, okay, well, yeah, I have that, but that's I'm not trying to get anywhere near that.